this is, a generational type of event, and it's not fun to have these conversations, but they're extraordinarily important. Biggest bank failure since 2008, second and third largest bank failures in U.S. history. We've been saying that the Fed rate hikes will eventually break something. Seems like we are here. Do you think that we're seeing serious breaks starting to form in the economy itself, however?
Yes, we are. I mean, this is the canary in the coal mine, and there's going to be more of it. I'm going to just back up a second and say, for all the traders out there, this is a buying opportunity.
Mm-hmm.
And if you look at the IWM, when I know CJ talks about IWM a lot, it's so oversold right here. That's an opportunity to buy this dip. If you look at the VIX, intraday yesterday, top 30. Standard deviation, one standard deviation is 28 from the norm of 20. That's traditionally a buying opportunity, short term. Most folks who look at the VIX and when they study the standard deviation as where it might be a buying opportunity, look at the close. I look at intraday. Intraday, we got north of 30 in the VIX. That's a short-term buy signal for me. There's a lot of stuff that's oversold. There's a lot of stuff that looks good. And then the backdrop of that is, what is the Fed going to do? If the Fed's rate hiking cycle is over, you want to be buying down here. You buy down here, everybody, as a trade. If it turns into investment, great. If the Fed is done hiking, if inflation turns tail, then you hang on to your good positions and you're going to ride them for who knows how long. But right now, it's a trade. You got to have your trader's hat on. Why? Because, Garrett, what's broken, the canary in the coal mine here, is the carry trade. The carry trade being short-term interest rates, which were borrowed against to buy longer-term assets, higher-yielding assets. That carry trade just showed it's upside down. We prove it for the banks. That's what killed these banks. Basically, the carry trade turned upside down on them, and they had to borrow short-term. As the deposits left, they had to replace those deposits that backstop the assets they bought, and they had to pay more for those short-term borrowings in order to facilitate the financing of the longer term holds where they were losing money on. It's not just happening at the banks. It's happening everywhere. So the carry trade with the yield inversion is going to be a problem for the economy. So
I want to show people. I want to show a chart real quick, and this is just the Russell. Am I sharing my? There we go. So Shah, you're speaking music to my ears at the moment, and the reason is, it's so difficult as a investor or a trader to hit the bid when you get into these conditions. But real quickly, just to show people, RSI is price strength, MFI is price strength and volume. It is lower on the MFI on the Russell than it was during these awful periods of July and June of last year. And look at what happened. Algo stepped in. People who were brave enough to hit the bid stepped in. You had to move on the Russell from 163 up to 174 here in October, 164 up to 176. Can you get a 171 up to 185? Absolutely out of oversold conditions. It doesn't mean that the worst is over. It just means in the short term, as a trader, understanding momentum and understanding when you want to hit the bid in order to take advantage of this kind of sound of cannons a moment is really, really critical. You might have missed it right now. Obviously, we've had a 7.5 point move on the IWM, but just keep this stuff in mind. Be greedy when other people are fearful, right, Shah?
Yeah, precisely. And yesterday was that opportunity. And if you hesitated, I think there's still time to get back in. I don't know how long this move can last. I think it can last till we get to some resistance levels, and because there's a vacuum here. And so traders who are really adept at taking advantage of the fear are already in. I had a couple of my friends call me, and I was busy on the golf course. I had a couple of friends like, are you buying this? You're buying this? And they were buying massive amounts of stuff, including Bank of America, JP Morgan. They were buying all kinds of stuff at the lows. And so they did really well. But if it's not too late, because if you have your trader's hat on, you can still catch a little momentum. If PPI comes in below expectation, if the Fed doesn't, if the Fed balks here and doesn't raise, I think they're going to raise 25 basis points. If they don't, then there's going to be more money coming on lines. And so you could get a nice higher. A longer term, I don't know how long this is going to last. We're not out of the woods by a long shot, but from a trader's perspective, yeah, it's time to put down some trades, people.
When you said I was on the golf course taking my phone calls, this is the first thing that popped into my head. Gordon Gekko, were you holding that phone too?
All right. Truth be told, I did have one of those, and I'm sorry. I had pretty much every phone. I did have a brick phone. I moved years ago, and I had a box of old phones, and I just put them out there in the yard sale, and nobody wanted them because they were useless. And I just said, I'd just take them. I wish I had them.
All right, let's talk real quick about the CME Fed Watch. The Fed futures are now pricing in no chance of a 50 basis point hike, and we are seeing the odds of zero at 32%. So this is a very critical moment to see about a 67% chance of a 25 basis point hike. Have your expectations changed at all with the upcoming Fed meeting?
My expectations have been dampened a little bit. They have been and consistently have been for a 25 basis point hike. I didn't see the need for a 50 basis point hike. That to me smelled a little bit of panic that they had lost control. Now, if they don't put it down a 25 basis point hike, it looks like they've lost control of the banking system. That smells like, okay, we got that wrong, and therefore we can't raise because we got that wrong. This is about Fed credibility in here more than anything. You look on both sides of the equation. Fed credibility is in question. Certainly, they missed SVB. They missed this whole idea of the carry trade in all the banks. They missed all that. And Powell has been saying all along the banking system is fine. It's in great shape. It's never been better. Not. And so the Fed credibility here is at stake. If they don't raise, it says that they're worried about the banking system. If they do raise 25 basis point, that says, okay, that's over, people. That was a panic, and it really didn't mean much. We're really on the inflation fighting bandwagon still. And I think that sends the best message that the crisis is mostly past. We're still worried about inflation. We're going to conquer that. That's what I expect. 50 basis points, if there was any chance of it, and I didn't think there was, is certainly off the table now.
The chat has absolutely gone off the rails. They're wondering if you had a yard sale, what it would look like. I would buy all of your clothes in a heartbeat. So, I don't even know what's going on in our chat. But somebody
I would
did
just go for the overalls, honestly.
No, I want the dinner jackets. He has a purple and black dinner jacket that is like it's up here. It's that jacket, and then there's 50 miles of dirt, and then there's other jackets, Shaw.